Now I'll do this hard to sharing with you because I came across this article by Straits Times, which reads, if you follow me with it, positioning for the next big thing. And if you look at the article, they mention if you have invested in a commodity super cycle, if you invested at the start of a smartphone, which is at 2000s, and the start of e-commerce, which is 2010s, you have made yourself life-changing financial gains. Life-changing financial gains. I am very concerned about the use of that phrase, simply because it puts too much hope, too much optimism, too much gambling mindset to things. If you look at the article's image over there, what do you realize? They talk about 5G. 5G is coming, correct? They talk about augmented reality, they talk about virtual reality. But if you look, augmented reality was in 1960s. It was first when you started. Virtual reality, 1950s. These ideas are not new. It's been hyped up for years, but as of right now, where are they? Nothing big is still in this two space. Not that it's not going to happen, but again, it's taken way longer than what many people have expected in many ways. Some people have thought, in the last few years, drones are going to be big business. Indeed, drone has reshaped how we can do filming, because you've seen so many nice filming shots of drones taking over the mountains and stuff. Or you can see government agencies, HDB, using drones for their work. And what about China? In this whole lockdown, they had even drones surveying on people and stuff. Amazon is using drones also for its delivery. But drones, while it was hyped up to be that big, eventually it's a small portion of how we actually function and work. Investing in it wholly did not make anybody a multi-billionaire in a lot of ways. What about Internet of Things? I've been hearing Internet of Things for the last, I don't know how many years it is. But where is it? Of course, with each jump in 3G, 4G, 5G, we always think Internet of Things is coming and reshaping how things work. Amazon, they had Alexa and stuff, but is it really that big? I don't know. Amazon is still making a lot through Amazon Web Services, which is not its Internet of Things. What about for chatbots? Chatbots was revolutionary, but right now Facebook just incorporates it if you use Facebook Messenger as a business account. So things look sexy at start, projected at enormous growth rates, may not be as big, not that they are not going to be important, but may not be as big, as lucrative as what many people come to think about. Now, if you ask anyone what is the next big thing, how to position, I got a feeling many will be thinking about electric cars, electric vehicles. That's why Tesla stock was about the best performing stock, big cap stock in the world itself. What about for NIO? NIO is a close rival from China, also in electric car space. I'm not saying electric cars are not going to take over. They are. I think it's a given already. But how much profit can it actually be reaped? That is up to anyone's guess. And it feels like as of right now, it's overly optimistic. There's a lot of things. If you talk about autonomous vehicles, Shenzhen itself, they are going to have autonomous taxis. Let me show you an example. This is actually AutoX, and they're going to roll out this autonomous taxis. It may change lifestyle a bit, but how big of an industry, how much profit can you make without looking at books? I'm not too sure about it. That's why I want to caution you in this video itself. And what about for Bitcoin? Some people are thinking Bitcoin. I've mentioned favorably, I'm looking more at Bitcoin, but as a diversifier, as a storage of wealth. If you look at Bitcoin as an investment, then you need to balance your point of view with some other stories. This is Tulip Bubble. Tulip Bubble happened in the 1600s, if I'm not wrong. That happened in Amsterdam. And what happened? Tulip prices skyrocketed as a collectible, something like that. And if you think at those people who speculated, you think that they are silly, but actually, possibly not. They are just like you and I. They bought into the hype, they bought into the market wisdom, and market can get things wrong also. So keep that close to heart. But I'm not saying Bitcoin is never going to go bust like Tulip. I'm not saying that. But I'm saying looking at case study gives you a right approach to how you measure risk. What about for gold? Gold is something more closely related to modern times. In 2010, it had a massive run up because of monetization of debt and stuff. That time, cryptocurrencies, Bitcoin was still not around. Gold was meant to be the main diversifier, which is what I also still believe in. And as of right now, gold is seen a multi-year decline. Right now, it's only coming back to the highs of 2010. So keep that in mind. If you buy something, make sure you consider risk also. But today, I'm not going to shoot down all concepts. I'm going to give you valuable tips towards the end on how I would suggest you position yourself for life-changing, breakthrough, forward-looking ideas. But I have something to show you also. If you look at someone who's very renowned right now, she's Cathie Wood. She actually runs ARK. ARK has gotten a lot of market limelight simply because they've delivered massive returns in terms of their ETF performance. If you look in terms of Cathie Wood, she's suggesting now that genomics is going to be the next big thing. For her, It's not about internet anymore. She's positioning herself for next big thing, and she's thinking on genomics, which is alteration of cells, changing how we deal with diseases and stuff. She believes everybody requires one, and she may be correct. But again, let me show you, just in case you haven't seen before, the charts. This ARK Genomics ETF performed tremendously. It was number 5, if I'm not wrong, in terms of the best ETFs in the world. So how can you actually position yourself for next big thing and yet stay safe? That is the gist of today's video. Now, there's a few key parts to take note, but it all rounds up to one thing, which is this. Take note of it. If you want to invest for something that's the next big thing, I would strongly recommend that you keep it within 10% of your total portfolio. That's if you're really, really very sure about it. If not, go only 5% maximum. Why? First part, if you get it wrong, it's not going to destroy you. You ask anybody that goes to roulette table right now, you bet on those 1:30 kind of gains. The person that is putting the money on the roulette table has this overly optimistic view that, hey, I can't go wrong for 30 consecutive tries. Might as well I go for the high odds one. And very often, those that bet on high odds ideas tend to go broke. So keep that in mind. If you limit your size, if it does tenfold, you're great already. If it does wrong, you at least don't burn everything that you have and go to a point where you can't recover. That's the gist of today. There are a lot of case studies about companies who were once on the way up, like BlackBerry. Do you still use a BlackBerry? Absolutely no. You're using Android phone, you're using iPhone. Nobody really cares about BlackBerry. What about Groupons? Groupon was once such a darling of the market, revolutionized e-commerce, but as of right now, Groupon is just a sad story of how business model actually failed. So if you keep this balancing point of view, you realize that you can get things wrong. Why not follow this advice? 5%, 10% the max, even if you believe an idea is super confirmed in your opinion, because you can get it wrong. The second part is if you keep your size small. I realize also when I keep my speculative ideas to a very small percentage, I actually can sit for the long term, simply because the gains and losses are just not that material in a lot of ways. You are much ready to hold on for a long term. Let me show you NASDAQ. If you had gotten things wrong, you bought the hype of NASDAQ in 2000, and you've gotten it wrong, you see tremendous loss, correct? Because indeed, NASDAQ bubble happened because everybody thought internet was the next big thing. And indeed, fast forward to today, internet is really a big thing. It's just that the journey to get there is painful. No one really mentions about it. If you bought at the worst time, the peak, as of right now, if you see 20 years later, you're still at 2.5 times, 250% gain. Still okay, correct? I want to show you in this chart also. If you bought on the way up, somewhere on the way up, and you had actually seen gains, but you didn't cash out, you actually rode it down, the bubble burst, the expectations deflated for years. This story shows that you need 8 years just to break even. The moral story is any revolutionary idea can also go wrong. Any revolutionary idea also has a price to it. Don't overpay for things because very likely it'll get you into trouble. Who are the people who actually made a lot of money in the internet bubble itself? One person, Mark Cuban. I'm a fan of Mark Cuban. I'm a fan of Dallas Mavericks also. But Mark Cuban actually cashed out. The people who cash out in the bubble are the ones who make the serious money, not the people who buy into the bubble. So keep that in mind. It makes you a lot savvier. With that, I'll end things off. You can position for a next big idea. You can maybe go to an ETF. Diversify this so you don't limit yourself to a particular company risk. But even if you go to a broad-based fund or ETF, go with a small allocation because things can go wrong, especially if it's such a speculative idea. Positioning for the next big thing. Investing is not about getting life-changing financial gains. Investing is about staying safe in a lot of ways, compounding correct decisions over time. That's my approach. If you agree, leave yes in the comments below. And with that, I would like to introduce you to the previous video I've done. That is actually unspoken truth of investing. In this video, I shared a bit about anchoring biases. I think it will help you be a bit more savvy about how to hold on to gains. And with that, certainly when you hold on to gains, you can really see compounding returns. I would like to invite you there. I'll sign off from here. Take care and goodbye.